Hello again, everyone. In this technical analysis of the stock market video, I call it refreshes or reverses because that old commercial is saying the pause that refreshes. Well, this is the pause in the stock market. We'll take a look at it in just a minute. You'll see what I'm talking about. This is a pause that's either refreshing and it's going to burst to the upside or it's going to reverse back down. So let's take a look at it. We're going to start off here with the 65-minute chart, what I call the hourly chart. And you can see one of the first step, the market took the first step this week, and that was breaking down out of this channel. We've been in a pretty strong channel since that December 26th rally that kicked off there and rallied over here since the last 6 weeks, I guess it's been. Right now, with the move that happened earlier this week, we broke right on down out of that channel. Now, that's the first step. That's the first thing I'm looking for. Now, the next target I'm looking at is 26.24 on the SPX. That will, be this key level right in here. And of course, right in here is 26.13, 26.12. So right now, just looking for continuation to the downside. That's what this looks like. Let me take a look at the 4-hour chart. The 4-hour chart on the SPX is showing you the same thing, same kind of channel in here. Last week I called the video resistance because I really looked at this area over here, all of this consolidation that was going on, and said, okay, we could possibly be running into resistance up in here. Well, I looked at this low from that October low in here or the close, and if you draw lines across between the two of those, you do have a resistance zone. Well, we punched a little bit above that, and then we flipped on back down. So now the real question is, did we truly run into that resistance? Are we headed back down? Right now, we took a first step. We broke down out of the channel. Let's take a look at the weekly chart. Okay, here's the bull channel that we've been in since that March 2009 low. And you can see with that move that we had in December, we broke down out of that channel. And, again, this is a weekly chart. So here's that snapback. Here's that December low at the end of the month. And we've come back 1, 2, 3, 4, 5, 6. And then we paused this week. We were only up 1.35 points on the S&P 500 this week. And look at this little doji candle that we have in here. Very, very tight little doji candle. Now, it's really interesting. When I look at the range on the S&P, 57.15 between the high and the low. That was tighter than here, which was 50, almost 60. And you go back in here, this range tighter was 68. You got to go all the way back to the week of September 23rd, right at the top, prior to the whole move to the downside, to get a tighter compressed week than the week that we just had right now. So that's when I look at it. What I've always talked about is expansion is followed by compression. Compression is followed by expansion. It just cycles back and forth. Now, there's no guarantee that we're immediately going to drop in here or that we're immediately going to have a big expansion move, but we are getting compressed. That's a fact. And it is the most compressed since back at the end of September. So, I'm looking for, based on the wave count, I'm looking for a turn to the downside. We may be right at that point. So the next thing I want to take a look at is the high yield bond fund. Okay, HYG was up very slightly this week. Little doji candle in here. You can see very tight little range. It was up 11 cents for the week. But the interesting thing is when you come over here and take a look at the daily chart, here's what's really caught my eye on HYG, is we are getting significant bearish divergence in here between the RSI and this move to the upside. Now, I really thought we were going to get a break and a close below the blue line in here. That's my 10-day exponential moving average on Friday. I thought we were going to do it, but it didn't do it yet. So we really haven't taken the step to break down, but I think we're getting pretty close. All right, let's take a look. I want to take a look at a couple global indices to show you what's going on in terms of why everybody's talking about the global slowdown that's concerning Wall Street and the U.S. markets. Now, we've talked about the weakness in China. Everybody's talking about the weakness in China's economy, how the economy seems to be slowing and the economic readings coming out of it. The Shanghai Composite, this is a weekly chart. The Shanghai Composite has been in a pretty strong downtrend. We've been kind of I would say chopping sideways over the last several months in here. I think it's an intermediate wave 2 within primary wave 3 to the downside. That's what I'm looking at right now. And the interesting thing is we got no reading out of China this week because of the Spring Festival. Their market, literally the Shanghai Stock Exchange, was closed the entire week for 5 days with the Chinese New Year occurring on Tuesday. Let's take a look at Japan. So what did the Nikkei 225 do this last week? It was down 455 points, but look at the type of candle that it just put in. It just closed below the trading of the last 2 weeks, and it's a big bearish engulfing candle in here. Higher high and a lower low than the previous week, and like I said, just closed below the previous 2 weeks. Now, there's no guarantee on any kind of reversal candle. You need continuation, but this sure looks bearish to me. And let's take a look at Germany, which I think had an even worse looking candle. So here's the picture on the German DAX. The German DAX was down 273.88 points, closing at 10,906.78. Look at this reversal candle in here. This again, did similar to China, but it seems like it was a little more exaggerated, a little more negative in here. Closed below the trading of the last 2 weeks, engulfed both of the last 2 weeks in here. So pretty negative picture. This is definitely trending down. Had some very negative economic news out of Germany. I think there was their manufacturing index. I can't remember which one it was. It was significantly lower than what was expected. And I believe their GDP dropped in the third quarter. And if the GDP drops in the fourth quarter, then they're going to declare Germany in a recession. Italy is already in a declared recession. So there's a lot of weakness going on in the European Union right now. All right, let's take a look at a stock that had a big move this week. Twitter had earnings out this week, and they didn't like it. Investors slammed the stock, and it was down $3.18 for the week. And when you look at this candle is a big bearish engulfing. It's even more bearish in terms of look how high it got and look at the low. It literally engulfed all of the last 3 weeks worth of trading on the close, and actually got below the prior 4 weeks of trading in here. Pretty negative looking picture. I'm looking for this to continue trending to the downside. I believe this we're in a 5-wave move coming down, and right now this sure acts like it wants to go in that direction. From a more traditional look in here, here's a picture just looking at just pure moving averages and other indicators, etc. We come down and we break that neckline, and I think that that top is going to be in on Twitter. All right, that's it for this weekend. Everyone have a great weekend. And if you felt like the video was helpful, hit a thumbs up. And if you're not a subscriber, hit the subscriber button. And let me show you where to go get some free videos. Free video updates twice a week, that is. Just go over here to joehenches.net. Let me go ahead and type it in. You can see you can actually go to beyondthechart.com or joehenches.net. Either one will take you right over here to the website. You click on this free market updates, and it'll take you to the page where you can just put in your first name and email, and you're good to go, and you'll be on the subscription list. And again, they come out on Wednesday and Saturday also. So, and then if you'd like to check out the membership, just you can look at that by clicking the page up here at the membership page. Everyone have a wonderful weekend. We'll talk to you on the next video.